Now I think it's time to dive a little bit deeper into the mechanics of accounts receivable financing.
Okay.
Understanding how the process works step by step can help you make more informed decisions
Yeah.
and avoid those potential pitfalls.
Oh, sure.
So let's say I've decided to explore accounts receivable financing and I'm ready to start talking to providers.
Right.
Walk me through the process. What happens first?
First step is the application. This is where you provide the financing company with information about your business and your accounts receivable.
And I'm guessing they're going to want to see a lot of paperwork.
Oh, yeah. Get ready for some document digging.
Okay.
They'll need to see things like your business's financial statements, tax returns, and of course, a detailed breakdown of your outstanding invoices.
So no hiding those overdue invoices in the back drawer.
No hiding allowed.
Okay.
They'll also want to see a list of your customers and their credit histories.
Right, because the creditworthiness of my customers is a big part of their decision-making process.
It is.
Okay, so I need to gather all my financial ducks in a row and be prepared to open the books. What happens after I submit that application?
Then comes the due diligence phase.
Due diligence.
This is where the financing company really digs deep into your financials
Okay.
to assess the risk involved.
So they're not just taking my word for it.
Right. They're verifying everything.
Okay.
They might analyze your financial statements,
Yeah.
review your customer contracts,
Right.
and even contact some of your customers to confirm payment history.
It's like they're doing a background check on my business and my customers.
Exactly.
Okay. And once they've completed that due diligence,
Yeah.
then...
Then they'll present you with a financing offer.
So this is where I get to see the actual terms and conditions.
That's right. The offer will outline the advance rate,
Okay.
how much of the invoice value they're willing to give you upfront,
Right.
the fees involved, and the repayment schedule.
And this is where those negotiation skills come in handy, right?
Absolutely. Don't be afraid to negotiate.
Okay.
Especially if you have a strong track record,
Yeah.
good customer credit,
Right.
or a high volume of invoices. Once you agree on the terms, you'll sign a contract,
Okay.
and then the funding process can begin.
So I get the cash, and then that repayment process kicks in.
Right.
But what does managing accounts receivable financing responsibly actually look like?
That's a crucial question.
Right.
Getting the financing is just the first step. Managing it effectively is what separates the winners from, well, let's just say those who learn some hard lessons.
All right, preach. Give us those pro tips for managing accounts receivable financing responsibly so we can avoid those hard lessons.
All right. First and foremost, budgeting.
Okay, budgeting.
You need to factor those repayment amounts into your cash flow projections.
Right.
Make sure you can comfortably handle the costs
Okay.
without straining your finances.
Because those fees can eat into my profits if I'm not careful.
Exactly. And remember, this is not free money.
Right.
It's an advance on payments you're already owed,
Right.
and it comes with a cost.
Got it. What's the next big thing I need to be talking about?
Tracking is essential.
Tracking.
You absolutely must stay on top of your accounts receivable, keep detailed records of all invoices, payments, and any disputes that arise.
Okay, so organized record keeping is key.
It is.
What about those customer relationships? Any advice on navigating those when there's, potentially a third party involved in that payment process?
Transparency is your best friend. Communicate clearly with your customers about the financing arrangement.
Right.
Let them know who to contact with payment inquiries and address any concerns they might have.
Right, no surprises. Happy customers are repeat customers.
Exactly.
Now, I remember you mentioned tax implications earlier.
I did.
Can you shed some more light on that? What do I need to know come tax time?
Absolutely. The good news is that the funds you receive through accounts receivable financing aren't considered taxable income.
Whoa, that's a relief.
Yeah, it's treated as a loan or an advance, not revenue.
Okay.
However, the interest and fees you pay on that financing are usually tax deductible as business expenses.
Okay, so keep good records for those deductions.
Got it.
Now, let's say, down the road I find a better deal.
Yeah.
Can I refinance accounts receivable financing just like you can refinance a mortgage?
Yes, you can definitely shop around
Okay.
and try to find better terms.
Yeah.
But before you jump ship, there are a couple of things to consider.
What? Give me the rundown.
First, check your current agreement for any prepayment penalties.
Okay.
Ending your contract early could cost you money.
Right, because switching just to save a few bucks might not be worth it if those penalties eat up all the savings.
Exactly. Second, do your homework just like you did when you first applied.
Okay.
Compare rates and terms from different providers, read reviews, and make sure the new deal is truly better overall.
So shop smart and make sure it's a real improvement before I make a switch.
That's right.
Got it. Any other wisdom to impart on responsible accounts receivable financing management?
One last tip. Set clear internal policies.
Okay, I'm intrigued. Tell me more about these internal policies.
Think about things like who in your company can authorize using this type of financing.
Okay.
Set limits on how much you're willing to borrow.
Right.
Define which invoices are eligible for financing.
So it's about having those guardrails in place to prevent misuse
Exactly.
and make sure that accounts receivable financing is being used strategically,
Yes.
not as a crutch.
Responsible use is key
Okay.
to maximizing the benefits and minimizing the risks.
Now let's shift gears a bit and talk about the legal and regulatory side of things.
Okay.
I know this might not be the most exciting topic,
It's not the sexiest topic.
but trust me, it's important stuff.
It is.
When it comes to finances, I'd rather be safe than sorry.
Absolutely.
So let's break it down. What are the key things?
Businesses need to know about the current regulatory landscape for accounts receivable financing. Well, at the federal level, the Uniform Commercial Code,
The UCC?
the UCC, specifically Article 9, which deals with secured transactions. It provides a standardized framework for lenders and borrowers across different states.
So it sets the ground rules for how these transactions are handled legally.
Exactly. It outlines things like how security interests in accounts receivable are created and perfected,
Okay,
ensuring consistency and fairness.
makes sense. What other regulations should I be aware of?
Another important one is the Truth in Lending Act.
Taylor.
Yeah, this federal law requires lenders to be upfront about the costs of financing.
So no hidden surprises in the fine print?
Exactly. They have to clearly disclose things like interest rates, fees,
Right.
and any other charges associated with the arrangement.
Got it.
And when lenders are checking your credit or your customer's credit, they have to comply with the Fair Credit Reporting Act,
The FCRA.
the FCRA.
Which protects consumers from, inaccurate or unfair credit reporting practices.
Exactly. And remember, state laws can vary.
Right.
So it's important to check the specific regulations in your state.
So do your homework and make sure the lender is playing by the rules.
Exactly.
In my state.
Yeah.
What about those anti-money laundering regulations we hear so much about these days? Do those apply here?
Absolutely.
Yeah.
Accounts receivable financing is subject to AML and Know Your Customer KYC regulations.
KYC.
Yeah.
Okay.
Lenders have to verify your identity
Right.
and monitor transactions for any suspicious activity.
Makes sense. It's all about, preventing financial crimes and ensuring transparency.
Exactly.
Now let's talk about my rights. What are my rights as a borrower in this scenario?
Well, first and foremost, you have the right to clear and comprehensive information about the terms of your financing agreement.
Okay.
The lender has to lay it all out: interest rates, fees, repayments, schedule, penalties, everything.
So no shady deals or hidden costs.
Nope, everything should be clear and upfront.
I like it. What else?
You also have the right to fair and non-discriminatory treatment.
Okay.
Lenders can't discriminate based on your race, gender, religion,
Right.
or any other protected characteristic.
Got it. It should be all about my business's financials
Exactly.
and creditworthiness.
You got it. And you have the right to shop around and compare offers from different lenders.
Okay.
No one can pressure you to take the first deal you see.
Right. And speaking of pressure, I also have the right to privacy, right?
Absolutely. Lenders have to protect your personal and financial information
Okay.
and can only share it under very specific circumstances.
So my information is safe, but what happens if there's a problem? What if I disagree with something in the contract or I think the lender is acting unfairly?
You have the right to file a complaint with the appropriate regulatory bodies.
Okay.
In the U.S., this could be the Consumer Financial Protection Bureau,
The CFPB.
the CFPB,
Yeah.
or your state's financial regulatory agency.
So I have recourse if something goes wrong.
You do.
And I also have the right to prepay my financing
Yes.
without being penalized unfairly.
That's right. Some agreements might have prepayment fees, but they have to be reasonable
Okay.
and disclosed upfront.
Got it. So I'm protected, but let's talk about the future for a moment.
Okay.
Any crystal ball predictions for the accounts receivable financing industry? What exciting innovations are on the horizon?
Well, one thing is for sure, technology is going to continue to transform the industry.
In what ways?
Well, we're already seeing artificial intelligence and machine learning being used for risk assessment and credit scoring. And that trend is only going to accelerate.
So even faster approvals and more data-driven decisions.
Exactly.
What else is brewing in the tech world?
Blockchain is another technology with the potential to really revolutionize accounts receivable financing.
Blockchain?
Yeah, it could make transactions more secure, transparent, and efficient.
So imagine a world where, invoice verification and payment processing happen seamlessly and instantly, all thanks to blockchain.
That's the
That
idea.
would be incredible.
It's definitely within the realm of possibility. We might also see a rise in more personalized financing solutions.
Personalized how so?
Lenders will leverage data analytics to tailor their offerings to each business's specific needs
Okay.
and risk profile. Imagine getting a financing package that's custom fit to your business, just like a tailored suit.
That would be amazing.
It would.
It sounds like we're moving towards a future where financing is more accessible, more efficient, and more tailored to individual needs.
Exactly. But with all these innovations, it's also likely that we'll see increased regulatory scrutiny.
Okay.
As the industry grows and evolves, regulators will want to make sure everything is above board
Ro-
and that both lenders and borrowers are protected.
So more rules, more transparency, and more standardization across the board.
Right.
That sounds like a good thing overall.
It is. It's about striking a balance between fostering innovation and ensuring that the industry operates responsibly and ethically.
Okay, so we've covered a ton of ground in this deep dive.
We have.
From the ancient roots of accounts receivable financing to the latest technological advancements, it's been quite a journey.
It really has. And it's testament to the fact that accounts receivable financing has constantly adapted to meet the evolving needs of businesses throughout history.
Absolutely. So let's do a quick recap of the key takeaways for our listeners.
Okay.
Before we wrap up with our final thoughts, what are the most important things to remember?
First and foremost, accounts receivable financing is not a one-size-fits-all solution.
Right, there are different types, different costs, different lenders.
Yep.
And it's crucial to understand which one is the right fit for your business.
Couldn't agree more. And while it can be a great way to improve cash flow and fuel growth, it's not without its challenges.
Right, we talked about those potential downsides, the costs,
Yeah.
the impact on customer relationships,
Mhm.
and the importance of managing it responsibly
Right.
to avoid those risks.
Exactly. Careful planning, due diligence, and clear communication are paramount when it comes to accounts receivable financing.
Couldn't agree more now. Before we wrap things up, let's leave our listeners with some final food for thought on accounts receivable financing for small businesses. What's the big takeaway?
Well, let's zoom out a bit and look at the big picture. The real question is accounts receivable financing the right move for your business?
And that's what you're going to help us unpack in just a moment, so stay tuned for the final part of our deep dive.